Good morning, good afternoon, good evening, everyone, and welcome back to the Breakfast Show. Happy New Year's first live stream, I believe first live stream of 2026. The first trading day was Friday, and that has been a great day. But as you know, over the weekend, a lot of things have happened in Venezuela. So it might have an impact on the market. So far, as you will see, pre-market, doesn't seem like the market is freaking out as of right now. We have a couple of things that we need to discuss. I will have a guest on in a couple of minutes. No, it's not Jose. Jose is at CAS trying to get Jensen maybe on his channel pretty soon. So first of all, welcome back everyone. Hope you had a wonderful time off. Maybe you're still on vacation, I don't know, but what is it? January 5th, Monday. I guess everybody's back in the office working right now. So what do we have pre-market? Well, pre-market we have this. We have quite a lot of green, believe it or not. This is our general list. Quite a lot of green in the pre-market. Crypto is, let's see, I think crypto is, also mostly greenish. Since Saturday, Bitcoin has gone up, ETH has gone up, Solana and Ripple has gone up. I did add those to the watch list right now. As for big tech, we have the usual, is the usual stuff. Yeah, Netflix still a little bit under pressure here. We have Apple, Meta and Microsoft that are red. All the rest are a little bit green, but as you know, it's purely pre-market right now. As for the semiconductors, all of them are green. And yes, Micron continues its way up. We have Intel that's up 4.2%. I mean, with the whole semiconductor industry, the more uncertainty around Taiwan, the worse things could get, especially in the short term. I'm not here to speculate what will happen or what will not happen. There's always something that you can put in the back of your mind. As for neoclouds, they also, on Friday, they were all up significantly, some of them double digits, and some of them right now, like Iron, still up 5.1%, Core Scientific up 4%, CoreWeave close to 4%, Nebius 3.6%, Applied Digital 3.5%, Cypher is up 3%, Hut 8 2.6%, White Fiber is up 2%, so pretty good there on the neocloud side of things. As for the fintech, not surprised. We have PayPal here that's basically flat. We do have one random analyst note that came out. Never heard of these people, but we'll have a, there is a small fly here. Fortunately for the fly, it's not going to last long. MasterCard, Visa, American Express are all down. Block is down 0.1, and then all the rest are green. So all in all, pretty good. BMNR is up 2.7, Palantir is up 3.5. Let's see, Oscar is up 3.2. I did see a positive note on Oscar. HIMS is up 1.1%. Where is Mercado Libre? Once we find NU, then Mercado Libre is not far from it. So Mercado Libre at 1.8% and NU is up 0.1% at the moment. PayPal never disappoints. Indeed, PayPal does not disappoint. Although I have to say that this week at CES, we do have Dr. Mark that will present and talk about the ads platform. They've been promoting it quite a lot on LinkedIn about what they're going to announce this week. So hopefully they don't disappoint. But yeah, I don't get my hopes up. Get a cat. I mean, we used to have a cat for 13 or 14 years or so. British short hair. I can tell you the hair was not short. Loved the cat, and I can tell you that he did not catch one fly. he did catch mice and some birds because we had a garden, but flies was not in his ballpark. But yeah, I'd love to get a cat. I like cats. I like dogs as well. But yeah. Anyways, moving on to the comment from the analyst. We have a couple of analyst comments actually, but let's start off with the painful one, which is the PayPal. So I've never heard of them. Monas Crespi, I thought it was Crespo, the Argentinian player. Hard downgrades PayPal to neutral from buy. And look at this. We should have taken profits when stock rose. Lesson learned here is we should have taken profits when the stock rose on low-hanging fruit fixes like stimulating Venmo monetization, reset to value paradigm in PSP during 2024-2025, rather than taking it as clear signs of moat widening. Admittedly, we do believe rate of moat erosion has slowed under Alex Chris. This is like, it's like, oh, in hindsight, we should have sold the top. Yeah, okay, but here you're giving me the explanation of we should have sold when the stock rose, but it rose because of positive things. So no, you should not have sold back then because things were improving. They're just saying it right now because, well, the stock went down. The reason here is absolute. It's very stupid. And most of the analyst notes that we've read, especially towards the end of 2025, when we've got all of these downgrades every single day, all of them downgraded, in my opinion, purely because the stock is down and has literally not moved that much over the past couple of weeks. Because the reasoning behind it was always, okay, we see things improving, going in the right direction, but still we are downgrading the stock. It's like, okay, maybe you could have downgraded the stock when the stock was higher and you gave the same reasons, but it is what it is. I do think that we do start 2026. Yeah, we are in 2026. I'm sure everybody that's still writing dates on paper or maybe on the computer is still going to have those types of mistakes every single time where I'm writing January 5th, 2025. Like, nope, it's already 2026. But yeah, I do think that the bar has been set so low for PayPal in 2026 that the only way is up, but then again, the only way was up not that long ago. And guess what? We went up and down, way more down than up. But yeah, eventually things would have to change. And if they don't, then you know what we say. We don't get married to the stock. We say thank you, goodbye. And we don't really look back. Cantor Fitzgerald puts an overrate rating on Rocket Lab with a price target of $72. I think, yeah, stock was down a little bit. I mean, Rocket Lab went up significantly, not just Rocket Lab, but AST went up quite a lot towards the end of the year. I do think that a lot of, would you say, short-term catalysts are already included, but yeah, there's still a long way to go with this one. And Rob, Happy New Year's, welcome back. I do also have to say something. I don't think he's in the chat today or right now. Ariel, the guy who we did have a bet with, the bet was that AMD would close out the year above $120. He did become a member of the channel, so respect for that. And we do have here, look at this. Who do we have here? We have the correspondent from Japan. Emir.
Hello, everyone. Oh my God, it's been such a while since I've seen you and the people in your chat. How is everyone? Hello, good morning, or no? What is it?
Morning, afternoon, evening.
Wherever you are, it is something. It is something.
How are you, man? How's Japan?
It is rough not knowing the language, since typically when you go to a country and you're a foreigner, you can always rely on English, but that's not the case in Japan. They don't speak English, and my Japanese is so it is improving fast, And I always reckon, my daughter has been here for 3 months now. She speaks like fluently Japanese. I'm like, if she can do it, then I can do it as well. So, we're getting there. But the country itself is great. I mean, people are very kind, hospitable, respectful. It's amazing country.
I agree. I've been there twice. Probably going to be there again. My cousin has arrived there yesterday. I like it. It works. It's clean. People are nice. It's true that they don't really. I mean, some of them do, but most of the people. This is the thing I was surprised the most by, with the fact that a lot of the times they just don't know English. I'm like, you know what? Fine, fine. I'll just have to use
told
Google
you
Translate.
the bubblegum story? Should
The
I tell it
bubblegum
quickly?
story.
So the first time when I was in Japan, I was 19. I'm 31 now, so this is a while ago. And I had a bit of a culture shock because, as you mentioned, streets are super clean. Like you won't find any trash anywhere. So I'm in the middle of Tokyo and I'm like, okay, I've been chewing this gum here for hours. I just can't find a trash can. Like there are no bins. So I'm like, oh my God, what should I do? So me and my friend, we enter into a bookstore and I'm like to the cashier. My friend speaks fluent Japanese. So, I mean, the trip was fine. So I was like, well, can you ask her if she has a trash can so I can like discard my gum? And as he translates, she takes a look at me, and do you know what she does? Like it's a young like part-time worker, like 19, and I'm like my age at that time. She just cups her hands and tells me to spit out my gum into her hands so she can discard it for me. I'm like, I'm like I just froze. I'm like, what? Like, no way. So I just kept on chewing that gum until we got back to the hotel. But yeah, it was crazy. A very hospitable, like amazing country in that regard.
That's crazy. Yeah.
Man, when she cupped her
can
hands, it was crazy.
can you imagine this happening in Europe? You're like walking into a store. Yeah, can I throw my gum somewhere? Like some guy is like, here, take. I'll take it. Never.
Crazy. No, I ask you to leave.
Yeah.
But I mean, Sweden is great too. It's kind of similar. Japanese people, they keep to themselves. That's like typical Swedish. The Swedish personal bubble. So I mean, fit right in. It's fine. Americans might struggle. Americans like to approach people, have random conversations while you're like in the queue, like at the supermarket or whatever. They just strike up a conversation that like it's not compatible with like Swedes or Japanese people. So Americans might struggle a bit with how outgoing they are. But yeah, me, that I'm kind of introverted, it's fine.
Yeah. But I mean, sometimes it's nice to suddenly like random conversation with someone on the train. But yeah, I for those that didn't go or have not been to Japan yet, I think it's worth visiting for sure.
Yeah, definitely.
All right. A lot of things have happened in 2025, towards the end of 2025. We're now in 2026. By the way, links to Emir's X Substack, and I think YouTube is also already in the description.
Damn, prepared everything.
But exactly, serious stuff here. But you wanted to talk about something specific in today's live. What do you have? 3 stocks that you think will
I
crush
thought
it?
we could do something fun. We haven't spoken for a while. Like, let's do something bold and like I'll give you 3 predictions that I think will do very well in 2026, and I've made them in an order, so it's like least undervalued to most undervalued. So you guys stick around, okay? So it gets progressively more exciting. But I know kind of try to keep it short. And if you guys know my content, I like to talk for like an hour and a half about any stock. That's kind of my Substack. Also, very long articles. But I'll try to keep
But
it short. Try
it's
to.
easy. It's easy to read. I mean, I have the Substack. It's easy to read, and it's not that long when you think about it.
Yeah,
At
I mean,
least,
you have to explain, a complete business in a short amount of time as possible. You have to like give supporting narratives to like, okay, this company is gonna grow. Okay, why? And then you have to like list all the variables and stuff like that. So yeah, I think relatively it is short, but I'm not very to the point. But today I've prepared to be as quick as possible. So if you feel that I didn't really extrapolate enough for you, all the companies that I'm going to be talking about, they are on the Substack, so you can always go and read there.
Exactly. One extra thing, this comment is very correct. Second of all, different types of articles can be found in the Substack. Deep dives are longer, but then company updates will obviously be much shorter. But yeah, I highly suggest people that are serious and like to read serious stuff, not the usual thread on X is like, I believe this company can 10x because, and then like 20 posts of some technical charts and hopium and whatnot. There is some real numbers and research in here. I highly suggest you go and check it out.
Yeah, I know you like the charts a little bit, right?
I spent 5 minutes on it, and that's about it.
Actually, I have a technical chart analysis book here that teaches you everything you need to know about technical analysis, and it's in Japanese. So I'll give it to you when you come to Japan next time.
Along with my Pokemon cards.
Yeah. All right. Should we get started? Can I share?
Yes, sir.
Let's go. The people want. Oh my God, they're already mentioning PayPal and stuff. You will be shocked. You probably have never heard about. I mean, maybe you've heard about it, but you've never researched this stock before. I mean, in general, the people in the chat. So let's try this. Does it work? All right. What are we looking at here, Neil? Is this F1 perhaps? Formula One Group is the first stock. And the upside to fair value is 20%. So we're starting slow, and then we'll ramp it up. So why is this going to be a big one into 2026? Well, first of all, just quickly mention that Neil is an absolute boss. He is actually been to F1 races, in the VIP clubs. He's chill with, all these world championship level drivers, all these hundreds and hundreds of millions, collectively in the room. And he's been chilling with those guys. So he's an absolute boss in that regard.
Billions.
Billies, yeah, with the B. No, for Formula One Group, I think is a stock I've never seen anyone talk about. But I believe that 2026 is really exciting for this company because what's going to happen? Well, we have regulation changes. The name Formula One comes from the actual formula, the technical directive that all the cars have to follow. So there are some set of rules, and then it is up to, all the teams to construct their own car. So over time, cars have become really big, bulky, heavy, which has really impacted racing in a negative way. There are some circuits like Monaco where you can't even pass each other because the streets are so narrow that, if you qualify, on pole position, you're like almost guaranteed a win, barring some technical difficulties with the car. I mean, over time, they're getting really big. So 2026 regulations, they're doing a lot to improve the racing. And why is that important? Well, let me see. Because everything relies on viewership for this company. This company, you might not know this, but Formula One Group does not dictate what the technical directive is. They don't control the teams. They don't control the drivers. So if the racing is exciting or not, it's completely out of this company's hands. And that is a major risk. They have to rely on the FIA, which is the regulatory body, to make the sport interesting. So what are we looking at here? This is the total Grand Prix attendance. Of course, during COVID, there were no fans attending races. But you can see something interesting here. Formula One was really stagnant. Not much happened. You can go back prior to before 2016. It looks similar. F1 always had a major, fan base, but it was not growing. Then something suddenly happened in 2021, and do you know what that was, Neil? What happened in 2021?
Do I have to explain the race and the
No, no,
event,
no, no, no,
or
no, no. A big
or
event
the
happened
Netflix?
that made, yeah, exactly. Drive to Survive came out on Netflix. And what happened after that? Yeah, look, the chat gets it. Drive to Survive came out on Netflix, and suddenly you have this major surge in interest in F1. Now, this is just, Grand Prix fan attendance. If you look at actual cumulative TV viewership, if you look at actual streams, it exploded here. And it exploded with a whole new fan base, which is the American market, somewhere where F1 was not known before at all. And what's interesting here is that a third of the current fan base became fans in the last 4 years. So Drive to Survive, DTS, is credited for about a third of the current fan base. And the current fan base is a lot more likely to interact on social media, to engage, to watch more races, compared to these fans, which are, die-hard fans. They watch Formula One for like 50 years, forever. The old heads. They, on average, actually watch less races than the Drive to Survive fans. People like to say, well, Formula One became commercialized. They sold out, but actually the new fans are a lot more loyal and they engage more, which takes us to the next chart here, which is social media followers. Now, I've only listed 3 platforms now. In aggregate, as of November, there are 113 million F1 followers across all of social media, and that is, I think, about the 4th largest, just behind UFC by like 6-7 million. So F1 actually is a top 5 viewership sport globally in the world, and I don't think Americans realize that. They don't realize the absolute size of F1. It is massive, and it is also the fastest growing sport, major sport in the world currently. So as you can see, it has been exponential in terms of the actual growth for the company. So why are we talking about fans? We haven't even looked at any financials yet, which is atypical of me, because typically when I do something, we only look at financials. Well, because the revenue structure here all relies on viewership, all relies on the fans and how the fans engage. So if we look here at the segmented revenues, of course you have the race promotion, which is the rights, the circuit holders, they pay F1 to have the race be there, and in order to make it attractive, for different circuits to outbid each other, you have to have an interesting sport. You have to have a big fan base. You have to make it worth it to them to pay F1 a lot of money to host a track there. Then we have the media rights, of course, TV, different streaming services. They also bid to get F1 rights. And then, of course, we have the sponsorships. You see it plastered all over the circuits, during the broadcast and everything. Similarly there, if there are no fans, why should sponsors pay up a lot of money to have their brands shown on TV, on the circuits, to all the fans? So this chart is actually very important, because everything for this company relies on this. And it has come to a point where drivers are celebrities. I'm sure even if you don't know F1, you might have heard the name Lewis Hamilton, Max Verstappen. These people are becoming global celebrities, and that's all good. But the big problem here, it is out of Formula One's control. They don't control who's driving the cars. They don't control what the different teams do. They don't control the technical directive. The only thing Formula One Group does, which is the stock, is they sell the actual show, which is why viewership are very important. But as you can see here, very stagnant in previous periods, but now it's starting to go up. Actually, if I included 2025 here, it would have been massive. because it's going to be over $4 billion in revenue for 2025. So something like 21% year-over-year revenue growth for 25, and I expect that trend to continue into 2026. Now, Formula One Group doesn't only own Formula One. They also bought MotoGP, which is, the highest classification of motorcycle racing. And if you look here, you see race promotion, media rights, and sponsorship. This revenue structure. Let's have a look at MotoGP. Media rights, race promotion, and commercial, which is, sponsorship money, essentially. And if you look here, it looks very similar, right? Looks very stagnant, just like these previous periods here. And I think since you have all these synergies, the same kind of revenues they're raising, mostly the same circuits, the same setup with different constructors, which is the teams, the regulatory bodies, the drivers, everything is the same. So it makes total sense that Formula One Group also bought MotoGP, which is, a massive sport in and of itself, but it is stagnant. It is not growing. It is not being commercialized. And if you look at the fan attendance, it is also massive. This is in millions per Grand Prix. Over a season. But it is stagnant. So much like we saw here, and now we see the explosion in F1, this can directly translate into MotoGP as well. Now, if you look at revenue per race, there's a huge difference here. About 7x difference. And here's the funny part. MotoGP has around half the fan base of F1. But F1 has 7 times the revenue. Media rights are 5 times more for F1, race promotion 6 times, and sponsorship money is 10 times larger in F1. But MotoGP has half the fan base. So here is a monstrous opportunity to monetize MotoGP, similarly to what they did to F1. And if you actually look at recent results and you simulate, if they even come half, the parity that F1 has. So let's say instead of 10x less sponsorship money, if you cut that in half, so it's only 5x less, you inherently have something like 30% growth on average just from that, just from applying what you learned growing F1 into growing MotoGP instead. You have, without doing anything else, just doing that, just applying what you learned from growing F1 into MotoGP, you have about 30% growth on average into MotoGP, which is, massive. So I think for 2026, I think the regulatory changes will bring a lot of new excitement. If you look at revenues, I don't have the chart here, but it is on the Substack. Seasons where a single driver dominates the whole season, no one wants to watch that. Like, think about NBA. If it is a single team that is dominating and no one else has even a chance, who's gonna watch that season? And take that for any sport. You need competitiveness. You need it to be exciting for people to feel engaged. And you need different race winners. This season that just concluded in 2025, it came down to the last race. You had 3 different people that could have won the world championship. So 2025 was massive. 2026, new regulatory changes, the competitive order gets scrambled. Hopefully the new technical directives will allow for more exciting races in 2026 and onwards. So I believe that for 2026, F1 group, Formula One group, it will be a big winner.
Question.
Yes.
How big of a risk is the key man risk here? Lewis Hamilton retires,
massive.
Max Verstappen retires.
Yeah, massive. Lewis Hamilton himself has more followers than all of F1 combined. So there is a huge key man risk here. And that is the thing. Similarly to like NBA, when Jordan quits or when LeBron quits, I mean, it has an impact. Now, Lewis Hamilton is obviously, I think in a recent article I read something that he's like the fourth most presentable athlete in the world. Like his value commercially is like the fourth largest, like most recognized in the world. So of course that has a big impact. He's getting old. He's going to retire from the sport soon. But we do have a lot of different stars. They come and go. Of course, he's one of the greats. But what happens to all the Lewis Hamilton fans that have grown to love F1 over, how many years they have been watching Lewis Hamilton? Are you just gonna give up the sport completely? Most likely, most won't do that. Most likely, the fans will continue to watch the sport unless they, only like him, for his social media posts, whatever. But yeah, there is a big key man risk. And there is a big risk, if the technical directive for 2026, are purely dominated by one team, it could be disastrous. If let's say Mercedes dominates for the next 4 years, I mean, that will hurt revenues. I mean, the problem here is that Formula One Group does not control any of that. But here's the positive thing: all the different teams. We're talking Ferrari, Red Bull, Mercedes, McLaren, all of these major teams. We have Cadillac entering, so an all-new American team. The US demographic is exploding. All of these teams, it's in their best interest to grow, engagement for their Formula One teams as well. So it's not only that the Formula One group is working towards making F1 as presentable as possible, the teams themselves are doing that. The drivers themselves are becoming, as I mentioned, celebrities. They themselves are also pushing for interest in F1. So yeah, there is a big risk since it's out of their control, but everyone is aligned in growing the sport, so to speak.
Okay, fair enough. I mean, I guess that's one of the main reasons why Ferrari brought in Lewis Hamilton.
Yeah, so what happened to the stock price?
unfortunate move, but yeah, I mean, it's going to be a very interesting season. I do also think that over the next 2 years, there are still going to be quite a lot of moves inside the sport. I can't. If Max is not going to want to race another season where the majority of the season his car is just driving backwards. Same with, I think, Leclerc. As much as he's loyal to Ferrari, I think, I mean, he deserves a car where he can maybe win the championship. Piastri, Norris, I highly doubt that Oscar Piastri is going to take another season where suddenly they tell him, oh, actually, we prefer Norris, so please let him win. So I do expect quite a lot of changes over the next 2 years that could excite a lot of the fan base.
Yeah, I mean, there's a lot of things happening. We're expanding with another team. Audi is also entering, which is massive in motorsport in general. So that will surely bring a lot of eyes to the sport as well. So there's a lot of things happening all the time. Formula One Group is working, better and better at growing the sport. They're doing more and more stuff on YouTube, and like they're creating better and better content. They're engaging more and more fans. The teams are doing the same. So the trend is very positive. So after reading the technical directives for 2026, it sounds like a lot more dependent on driver skill. So hopefully there will be a lot more exciting races, and not only, the seasons being dominated by one driver or one team that we've been seeing lately. But yeah, 2025 itself will be massive. Q4 will be massive. And I believe that 2026, this one might be, one of those undercover outperformers. So that's the first one. Then what was that? 15 minutes. Yeah. So yeah, if I keep it to 15 minutes, we can finish before a market open.
Worst things, you end the second one just before the open. We do the open and we continue with the third one right after. which is fine. Stefano, yeah, this was the first pick. We're now entering pick number 2. I do think that Suzuka is late March this year. If I
think
do get tickets, I'll let you know.
don't say things like that. Don't give me some excitement. All right. Next stock. This one. So F1 fair value $117 per share. So that's 20% upside roughly. Next one, big jump, 41% upside to fair value at 721. Now this one you might be familiar with, even though I don't think a lot of people talk about it. But next one, sorry, I forgot to mention the margin profile. So Formula One itself, it's very capital light. Most of the operating margin is essentially, it can be considered as free cash flow directly. It's very capital light. Capital expenditures are tiny. Of course, they built out the Las Vegas track the past 2 years, but outside from that, very little capital expenditure. So free cash flow margins are relatively high. So anytime you grow revenue, it's directly margin expansion, because as I mentioned, the growth comes from social media engagement, the teams driving the value of the sport. So basically they're just reselling the rights to the circuits, to the streaming, the sponsorship slots. It's not capital intensive at all. So anytime they grow revenues, it directly grows the margins as well. So that's also another dynamic I forgot to mention here. All right, next one. Come on. There we go. Do you know what we're looking at here? One of those compounder machines. So this is
SPG,
yes,
S&P?
Yeah. S&P Global. That is correct. So it's not too important here. I'm not going to go through the whole business. I'm going to focus on 2 key revenue segments, and that is the ratings and the indices. And those are, absolute fortresses. And we'll get into that. But, S&P Global, it's seen as, one of those, compounder stocks, one you can have in your portfolio and you can just, rely on it going up and up and up and up. So this is the revenues, and, the trend is clearly upwards. Similarly, if you look at net income, the trend is upwards, even though there was a dip, and that is explainable. So when I pitch this stock as, as a fortress, indestructible, undisruptible, people tell me, well, okay, here we have the margins as well. Absolutely huge margins, similar to Formula One group, very capital light. So operating margins essentially are free cash flow to the firm margins. So very, very high. On average, it's around 42% over the last couple of years, and I expect that to increase. And the management team actually also guided for margin expansion as well. But the feedback I recently got was, well, Amir, if it's such a compounder, why is it performing, on par with the S&P 500? Like, it's not outperforming. So this is, the last 5 years of performance, and you can see it has not done much of anything. And then my question back to this person was, well, why should S&P Global have outperformed the market? Actually, what we are seeing here, this is the absolute bottom of the cycle. You can see this revenue growth. You can see this, quote unquote compounding, but this is at the actual bottom of the cyclical market. Because if you look at M&A deal volumes and the actual deal values, it has been horrible the past 5 years, and it's been going down in recent years as well. It is only now slowly starting to pick up. And when you look at credit ratings, and the M&A volumes are massive for that. Also, the debt markets are also massive in that regard. So you can see here, at the ratings revenue, it essentially trades, not trades, the revenue growth is directly tied to global debt markets. So because we had such high interest rates due to COVID, no one wanted to refinance their debt. No corporations, no countries. So M&A deals were down. No one was taking on debt. There were no IPOs. So I'm like, okay, why should S&P Global have outperformed these past couple of years? It was absolutely horrendous. Like the fact that they managed to actually grow during this period of time just shows what a strong company this is. Like it was the absolute bottom. However, things are looking brighter going into 2026 and onwards. M&A deals are starting to pick up, and they are forecasted to be a lot higher. In 2025, we saw the IPO activities start to become alive again. IPOs are a thing again, and all of that will directly translate into ratings revenue. As you can see here, absolutely massive margins. I mean, we're talking 66% margins in Q3, but on average over the past 5 years, about 65% operating margins, which is completely insane. I mean, I don't think you guys realize how high that is. But what will really bring this up is there's something that you can't really turn a blind eye to anymore, and that is what they call the debt maturity wall. So there's a lot of corporate debt expiring over the next 5 years, and it starts to ramp up in 2026, and in aggregate over the next coming years there's about 13 trillion in debt that will drive refinancing demand, and that will directly tie into these ratings revenues, because S&P Global has 75% market share of the global debt market. So when you have $13 trillion in expiring debt that will need refinancing, and you have a company that has 75% market share of that global debt market, it's going to be good times for S&P Global moving forward. And that's just current debt, not speaking about all the new opportunities, because they are also expanding into private markets, emerging markets. You have all of these, you have this AI hype that is driving, the build out of data centers that will need capital, that will need credit ratings. So you have all of this huge demand that is suddenly going to come from 2026 and onwards that will drive ratings revenues, through the roof for S&P Global. And when the revenue grows at that pace and you have 66% operating margins, that will directly translate into a lot of cash for the company, a lot of free cash flow to the firm for the company, which of course drives intrinsic value very high. So yeah, M&A activity will go up. We have the debt maturity wall of expiring debt. We have a lot of new debt demand due to AI hype, a lot of rebuilding into war-torn areas. For example, Ukraine will need to be rebuilt and so forth. So there's a lot of things going on globally that is tailwind for the rating segment. But there's ones typically when you have a company, you're happy if you have one revenue segment that is very high margin. S&P Global has essentially 4 or 5 segments that are all super high margin. But the next one I want to focus on is the indices. Now, you might be familiar with the S&P 500, S&P 400, 300, the different Dow Jones indices, the S&P tech indices. There's so many instruments these days. And what's beautiful about this is that it also, as you can see, is just compounding over time, and even at even higher operating margins than the ratings. So this is around, on average 71% operating margins, which is, just completely insane. And what's driving that is that there's a shift going from, active assets under management into passive. So people are moving more and more money into, passive instruments. Like people are placing their money into the S&P 500 instead of trying to uh, instead of trying to pick stocks themselves. So this chart, I could only find reliable actual figures for 2023, but in text it was mentioned that by 2024, this actually was more than 50% of assets under management was actually passively managed rather than actively. So we're already past the 50% mark, and um, if I had to guess, that I would guess that this trend also continues and will drive, more and more assets towards, indices, which directly benefits S&P Global that, owns the benchmarks here. Why did SPGI stock price go down in September? I have no idea. I don't look at stock charts. That's another thing about me. I don't look at what the stock does.
Was there a reason for the weakness in 2025? Did they change guidance? Maybe one business was sold, maybe they bought something.
I have no idea. I mean, they didn't report in September, so there's no reason it would have had. Or maybe they did report in September, but I don't know. The numbers were, pretty good. I have no idea actually what happened in September. Sorry.
Stock dropped 11% or so.
No idea. But what I do know is that the financial sector as a whole underperformed during 2025, and we have experts like Dan Ives saying, no, not Dan Ives, Tom Lee saying that the financials will be big in 2026, and I echo that. 2025 had a lot of speculative stocks, pre-revenue stocks going up massively, and these super high quality companies were kind of left behind, which is great if you're trying to buy. I bought a lot of S&P Global during 2025, and I believe that as we mentioned, it has only performed on par with the S&P 500 essentially, over the past 5 years. But as I mentioned, this was during the absolute bottom of the cycle for the company. It is only now that we're beginning, the next mega cycle for the business itself. As I mentioned, M&A deals are going up, and more money is going towards passive investing rather than active investing. IPOs, volumes are returning to markets. They are also expanding what they're benchmarking, what kind of ratings are providing. They're expanding, so there's a lot of tailwind. So I don't know specifically September, but I believe that 2026 and onwards, we also have the debt maturity wall. 2026 and onwards, I think S&P Global will be a massive winner. And like Tom Lee said, I think the financial sector overall will also outperform in 2026. So it's just, one of those stocks within that sector. And I believe one of the strongest as well. So about 41% upside on this one. So fair value is $721 per share. I think it's around 500 probably. I haven't checked in a while. Probably somewhere around there. So my second winner in 2026 that I believe will outperform.
Okay. Quick note. They did buy in the company for $1.8 billion for the intelligence part of the business. It's called With Intelligence for $1.8 billion. And in September, there was an analyst conference. So I guess
there's a problem with the market intelligence segment, which is, been lagging a lot. So there's a problem. So For those of you that don't know, if you're using Fiscal AI, it uses S&P Global data, and they have their own, Bloomberg terminal competitor, FactSet competitor. There are so many Refinitiv. So the whole space that this market intelligence sector operates in is highly competitive, and everyone is now scrambling to, okay, we need an AI solution, we need some chat AI solution within the product. So everyone is scrambling, buying up companies. And similarly, S&P Global has bought several AI companies, to bolster their own offering, the Capital IQ platform, which is what it's called. Luckily, most of the third party alternatives that I've seen, like Fiscal AI and various other similar platforms, they're using S&P Global over different vendors. So that's a plus. But yeah, they have to keep innovating and doing acquisitions to bolster that offering. So it's one that I'm less excited about. It has a lot lower operating margins than ratings and indices. I explained that more in detail on Substack, where I go through all the segments in detail. So this is just a brief overview why I believe 2026 will be good for the company, and I believe that will primarily be good for the ratings, which is about a third of the overall revenues. And given the growth that I expect from ratings, it will grow to about half over the coming years of all the overall revenues.
Okay. Before we move to the next one,
Yes.
we have 8 minutes, so maybe we'll wait a bit, because the last one, I don't know, maybe it might last longer, maybe not. Some people have already put some predictions here. We have Adobe or Uber, BMNR. I highly doubt it's BMNR.
Okay, wait. It is 50% upside to fair value, the last one. And it's a very, very popular stock. Super popular.
Yeah, my prediction was this. My prediction was Hood. We'll see. We'll see. We have some SoFi. We have some Manchester United stock. Manchester United also sacked their coach.
Oh, it's trading? Manchester
Yeah.
United?
Yes.
It's probably a
PayPal,
poor
Zeta.
stock.
It's not performing that well. I'm not that surprised.
Is FaZe still publicly traded? It's also a disaster one.
FaZe, I don't think so. I don't think so. Let's see. Wait, is it? Thought it would have been delisted already by now. FaZe holding stock price is 18 cents apparently.
Oh, nice.
Very
nice. By the dip, guys.
Maybe. So while we wait for the market to open, any 2025 lessons or things that you did very well, things that you maybe would have liked to do better?
We actually made the same mistake, I think. So if you tell us one of the bigger learnings you had from 2025, that came from a mistake, then I'll tell you mine as well, because I think it's the same one and tied to the same stock as well.
Yeah, so I mean, it's a lot of hindsight, right? Because I mean, we are talking about what we could have done before, and that's the PayPal move.
Yes,
especially the options.
Yes.
At one point, I was up a lot on the options. The point was basically when they reported that their last quarterly figures was good. They had the OpenAI announcement. Everything was fine. Stock was close to $80. And we were like, okay, finally the market might continue to push this one up, and it understands how undervalued it was. Should I have taken profits? Well, now obviously yes. But back in that moment, we were like, okay, after all of this time where we talk about how undervalued this is, why could this not have gone up more? But the market said, screw this, we are taking it back down. Not only did it go back down, it went even lower than before, and we took a a huge hit. But the second thing is I would say I didn't buy Robinhood in April, although I did buy some other stuff that also went up quite a lot. But I think I talked with you and some others about Robinhood when it was closer to everything crashed. It was closer to $30 or so. But yeah, that's I guess one of the regrets of regrets slash maybe mistakes for 2025. But again, it's all hindsight. In the moment, especially the PayPal thing, it just made sense to hold it. But yeah.
Yeah, so I never, use derivatives. Actually, on my account type in Sweden, I couldn't even buy options. But as I was preparing to move to Japan, I opened an interactive brokers account. I was like, okay, let me try purchasing options, and they're not, short-term options. I think I have PayPal 2027, like January, whatever, and then I have one for like June in 2026. I was like, well, 110, because that's still, below fair intrinsic value. I'm like, well, the stock should have had a catalyst by then to bring the stock price to there. And yeah, similarly to you, I was destroyed on those. And those are the first and only options that I bought. The thing is, I should have, as I was buying them, I already knew. I'm like, people are telling me, well, did you learn your lesson? I'm like, no, as I did it, I already knew that I shouldn't be doing it. I already knew that this is not for me. This is not the way I invest. So, Druckenmiller has the same, story where he bought a stock, in the 2000s, and they're like, well, did you learn from that? It's actually like, no, I already knew that it was a mistake, so I didn't learn anything. So I have a similar thing, but about PayPal, I will tell you this. As I was moving my portfolio, I had to sell all of my positions in my Swedish brokerage because I couldn't transfer it. Typically, across accounts, you can just transfer, equity. But since I had a very specific account type in Sweden, it is simply not compatible. It's a different type of ownership that doesn't translate. So I had to sell everything, wait for that to settle, get the cash, put make a transfer to put the cash into interactive brokers. So it was about a week without any holdings. And let me tell you about PayPal. PayPal stock has not done anything for the past 3-4 years. But during that 1-2 weeks, I had massive FOMO for PayPal. I was like, dude, this stock, like, any day it can just move. Like, the stock is so undervalued that just a tiny catalyst could be enough. Like, obviously now I feel stupid for feeling FOMO because it's not done anything for 4 years. But similarly, Palantir stock that I held did nothing for a long time. Robinhood did nothing for a long time. These things are, sudden, and I felt that, like, oh my god, I have serious FOMO about PayPal when I didn't hold it for those 2 weeks. So yeah, that's a funny anecdote there. 2 minutes. But yeah, I think PayPal
FOMO for PayPal, yeah.
FOMO for PayPal is done nothing. But yeah, I think still, I still think this is the case for PayPal. They have all the nuts and bolts in place. They just need, some sort of catalyst, and I think the stock will move, aggressively. I think even like the stock might double in, as little as a month. I think it's at that level when things start to materialize financially, when you start to see the results of the ads, when you start to see the results of, Fastlane, all of these things start to hit the top and bottom line. That's probably going to be the catalyst.
Yeah, I mean, this week we have CS, and they're supposed to present their ads platform. Yeah. So hopefully that's something good. And then towards the end of this month, maybe early February, they report Q4. The sentiment is already so low, so any upside and maybe positivity on consumer spending and things for 2026, that's the thing, could push this stock up just super quickly. But then again, we might see the same thing as what we've seen in October, when it jumps and then the market is like, nah, screw this thing, we're bringing it back down. That said, That said, the market is open. Ladies and gentlemen, it's like ding, ding, ding. I do actually have, I have a mini gong. Like, ding. For the market is open. I don't have cowbells here, but this should do. So the market is open. We're seeing a little bit of green across the board, I would say. Big tech is mostly green. Maybe, but I'll appear on your channel and we'll talk about some stocks that I think.
Yeah, make sure to tune into my channel to see Couch Investors' top picks for 2026.
Terrific picks. But yeah, let's see. Fintech is mostly green. Even PayPal is green, believe it or not, for now. I don't know how long these things will last,
skeptical.
Close the market. Close the market.
But yeah, have you been to CES? You're such a baller that it wouldn't even surprise me.
I almost went to CES right now because Jose is there, Tanner is there, and Amit is there. I got the invite to go to the NVIDIA keynote thing, but the flights were just so expensive because it's right after New Year's. Like flying to Las Vegas for a European is quite a lot of money. So I was like, I'll skip it this time unless they want to sponsor my flight, but they didn't. So we'll see. We'll try it next time.
Did you know that I've actually been to CES and I watched AMD and NVIDIA keynotes in Intel at the time and stuff
I think
like that?
we spoke about it in private once.
Yeah. So for those that don't know, I used to be a tech journalist as well. So as a part of that, I was media at CES, and it is very interesting. I've been at a similar event in Taiwan called Computex. When you have that media badge, like they treat you very, very differently. Like they very much want favorable press. And of course, my publication is very, strict. We don't accept, typically they will give out goodie bags and stuff and have fancy dinners where media is invited. We didn't accept any of that, very, true to the consumer, not being bought and paid for and stuff like that. So I think a major tech company offered us, amazing suites at hotels at the Strip, and we turned it down and booked some cheap hotel in the ghetto instead. So stuff like that. But yeah, I mean, CS is amazing. I don't know where PayPal is, how big their booth is, but yeah, a lot of business happens during CES. So just knowing that they have a presence, can mean something, for relationship building with the different vendors, and everyone is there. So hopefully they sent their brightest.
I mean, they sent the guy that did the advertising stuff at Uber and at Amazon. So
yeah.
Hopefully they do well. Hopefully they do well. But the thing with PayPal is that a lot of things have gone well for them, but for some reason they just love to play that down and focus on the small negative stuff. I mean, small. It's big, but in my eyes there are way more positives that have happened with PayPal since Alex Chris came in than negatives. But for some reason they don't for now like to spin the positive thing. Hopefully they did buy a lot more shares this quarter than previously, because that would be a missed opportunity.
But that's another thing with PayPal, because the downside at this point, it is limited. Like the stock at this levels and at the pace they are repurchasing shares, even if they don't take out the debt to do it, they will repurchase the whole company within a few years. If the stock drops even lower, that time will be cut significantly in terms of years to bringing the whole company public. So the stock can't really go down much further. Like it is so de-risked at these levels. Like it is insane. And I did a calculation about the stock, at $60 per share. It is pricing in a negative 4% revenue growth per year over the next 10 years. So compounded negative 4% growth at current margins. So, it is just insane how the stock is trading. So I really believe once we get one major catalyst that the market, because everyone knows that is undervalued, institutions knows it, people who hate PayPal know that is undervalued, people who love PayPal know it. Everyone knows that PayPal is undervalued. You just need that one catalyst. So I think once it happens, it will be aggressive. But that's coming from someone that doesn't even look at the stock chart. So what do I know about how the market reacts? I have no idea. But if I had to guess, something like that will play out. Is it this year? I thought it would have been in 2025. So obviously I was wrong. But I think 2026 is also a strong contender for when we'll finally get something material in the financials. That there's okay. Here's what the ads business is bringing us, and here's what we expect it to bring for us over the X amount of years, like the next year or so. So I believe 2026 will be great for PayPal as well.
Well, I hope they hear you. I hope the market gods hear you out. A quick reason why Uber is down this morning, 3% or so. They got a downgrade by these guys right here, and from hold to sell, and a price target of $73. They still view a lot of positives about Uber, but they do say that 2026 there is heavy AV competition, and that's a major risk for them. You know my thoughts on this whole thing. I think they'll just be a good distribution platform. They have a lot of investments in plenty of AV players around the globe, but of course the risk is that if Waymo and Tesla take 90+% of the market, you won't need a platform like Uber or Lyft. But I highly doubt that's going to happen anytime soon. But that's a story for another day. And who knows, maybe that's one of the picks I will talk about on Emir's channel when I'll appear there. We go back to your picks. Pick number 3. We've had some...
we had some guesses, yeah.
Yep.
Let's see.
I think I was right.
Yes. Here we have. It is Robinhood, and we have 50% upside to fair value, $172 per share fair value for me. And I will keep it short about Robinhood. I mean, I go into a lot of detail about everything surrounding the company, all kind of metrics and KPIs. I calculate everything for you guys, but I want to focus on the key parts here. And that is what an execution machine this company is. So this is lines of businesses that they have that generate over 100 million annually. So in 2019, it was just one, the trading, of course. Then 3, 4, 5, 6, and then we have a ramping these past 2 years, 9, and now 11 different lines of businesses generating over $100 million per year. So, and if you look at Vlad, and if you look at the rest of the team, they are not standing still. They're always looking at the next thing. Now prediction markets are gonna be massive. They're the first one there. Token, like even looking at futuristic, like what's the next era of investing? What will it look like? We're talking about tokenization and stuff like that. They're already there. They're talking like they're first to each trend. So I like to think about it the way that Nvidia is always first to the trend. So gaming GPUs, Nvidia was first to the market, took most of it. AMD came after a while, and over time AMD reached parity performance wise, cost wise, but by that point, when they reached parity, Nvidia was already at the next trend. So it was like crypto mining. They were the first ones there, took the whole market. AMD came after for the scraps, and over time they reached parity with their cards in that segment as well. Then came the AI GPUs. Nvidia was first there as well. Now AMD is catching up, is growing, and they will likely reach parity. But I'm betting that Nvidia is also going to be the first ones to the next trend. So similarly, in that vein, you just have this executioner's mentality. at Robinhood, and that is being seen, just how many events they're holding. And it's not like PayPal where they're like, yeah, we're going to have an ads business. They mentioned it in 2023, and whereas like in 2026, we're not seeing anything material. They're actually executing. When they reveal something, they're like, and by the way, it is already available if you update the app, like stuff like that. So that's one of the key things about Robinhood that will surely continue into 2026 as well. And I want you guys to look at this chart, and you can see that, well, it looks very cyclical, right? It goes up, it goes down, and then you have this massive explosion here. Do you remember what we just talked about S&P Global? How about this was essentially the bottom of the cycle, and now, just now, IPO activity is starting to ramp up. Just now, market volumes are starting to return. I mean, if you look at where capital is placed, I mean, there's still a lot of money on the sidelines, or invested into treasury notes or other similar, yield instruments. There's still not a lot of capital inflows into the markets. That is just now starting to happen, and already we can see this kind of explosion. M&A activity will start to pick up. All of that excitement is just now starting, the next leg of the cycle. But similarly to Neil, I didn't make the same mistake he did, but I made that mistake even earlier, because Arnie and Amit were pitching Hood to me at $8 per share. And I didn't want to invest because I saw a lot of red flags. I saw there's severe cyclicality risk here. At that point in time, they didn't, prove themselves to be the execution monsters that they are today. They were unprofitable. I didn't see the path to profitability. So at that time, I didn't invest. However, in April, the business had developed enough where I felt confident into, making it a massive position. So obviously, I wrote that up, and I'm grateful for that. But now they're a lot more diversified. It's, as I mentioned here, they have 11 different lines of businesses generating over $100 million annually, and that is going to continue. So it is not like they are diversifying heavily. So it's not only about transaction-based revenues anymore. It's going to transition more into subscription-based revenues. You're starting to see, I don't have the chart here, but the amount of assets that are generating net interest for Robinhood has absolutely exploded. Like this, you can even see the golden part here. It has grown massively if you compare it to these periods. Like over time, the revenues are being diversified heavily. So that really made me more confident about Robinhood. And you can see it in the market share as well. So this is what I've calculated myself. It's funny because I've been calculating this, for over a year now. But in the last quarterly report, Robinhood actually showed their market share as well for the first time. And my calculations, were correct. Well, it's difficult to mess up because they actually disclose their volumes. But it's funny that stuff that I've been, using as KPIs that they're also adopting here. But as you can see, clearly growing and taking market share aggressively. So up to 1.22%. Of course, you had the meme craze here, where most of a lot of the volume that you saw in the market during this speculative bubble that we had in 2021. A lot of that happened on Robinhood, which is why they had this spike, but then it died down and normalized, and now you're starting to see the growth effort actually start to materialize. Similarly, you're starting to see that over time in crypto as well. Now, I don't have a chart here, but the take rate has actually surpassed Coinbase's take rate as of Q3 2025, when you account for both the commercial and institutional crypto trading. So the yield is actually now higher than Coinbase. And if you go back a year, Robinhood had less than half the yield that Coinbase had. So they're actually, growing how much they're making off of crypto by a lot. And this chart might surprise a lot of people. People think that only small time investors use Robinhood, but if you look at the average size of a trade on Robinhood, it is over 3.5k in aggregate, and for crypto it is now closing in on 1.5k. But the trend here is clear. You can see that whales are starting to move to the platform. All of these incentives to move all your assets to Robinhood, that is actually starting to happen. People are moving from Schwab and all of these traditional brokerages. They are moving to Robinhood now. Even traders are starting to consider Robinhood now that they have Legend. They are actively listening for feedback on that platform just to bring everyone over to Robinhood. And that might also be a red flag. Like, oh my God, you're paying so much money to acquire all of these customers. Like, how can you stay profitable? Well, actually, the average revenue per customer is more or less always way below the average revenue per customer. So within the same period, a customer has already paid off what they cost to acquire that customer. Now, decreasing the customer acquisition cost is a lot more difficult than raising the average revenue per customer. But as you can see, just keeping it relatively stagnant. Now, of course, you have these incentive periods where it spikes up, but the overall average is relatively stagnant. So you're able to acquire customers without spending more to acquire them, but how much you're making off of each customer, the trend is very, very clearly up and into the right. If you look at something like SoFi, they're actually decreasing average revenue per customer and increasing customer acquisition costs. So SoFi has a lot bigger issues trying to acquire customers. Like, people are willingly moving to Robinhood, and Robinhood are finding increasingly more ways to make money off of those customers. More and more services, they're going to start with the banking service. They have the advisory services. They have all of these benefits for being a subscriber. All of these different diversifications from mere just simply transaction based trading revenue. So they're moving away from that and transitioning into all of these other avenues of making money off of each customer. And all of that, of course, translates into the infamous Rule of 40 score. Now, this kind of score can only be seen in like Robinhood and Palantir. Of course, Palantir is a lot more difficult because it is a completely different kind of business, but still, this is very impressive for Robinhood. Now, we have two lines here. As of the latest quarter, they changed how they calculate the Rule of 40. Now they use trailing 12 months. So that is the golden line, the new line, and that's the one with the annotations. So up to 131 on a Rule of 40 score. The old one only used period over period adjusted EBITDA, adjusted for stock-based compensation and revenue growth, and now it is the same but on a trailing 12-month basis. So for those of you that don't know, for a SaaS business, you typically measure the quality of growth. Anyone can just go and make a bunch of acquisitions or burn a lot of cash and grow very fast, but it will come at the cost of profitability. So what the Rule of 40 does is that it adds up the revenue growth and the profit margin, and together they should make 40 or more to signal that this is high quality growth. So in some periods, maybe you will spend more money to grow revenue. So maybe you have 30% revenue growth and 10% profit margins together. That makes 40. So it's still high quality growth, and that's typically used for SaaS businesses to see like, okay, is this high quality growth or is it low quality growth? And it's not a gap metric, so the companies themselves, define them as they want or as they feel correctly represents, the profit of their business. So Robinhood uses adjusted EBITDA, which is more or less a good translation for free cash flow generation. Since they have a lot of assets, you can't really strictly look at free cash flow because working capital moves a lot. So adjusted EBITDA, adjusted stock-based compensation, it is a good equivalent to free cash flow for the business and revenue growth. So 131, that is absolutely insane. So when you combine the revenue growth and the profitability, 131 using trailing 12 months, and it's not only that the score is good, the trend is increasing every single period since they crossed 40 here in Q2 2023. It's just been going up each subsequent quarter, and that just shows you that, look, we look at this explosive revenue growth. They are getting this while also improving margins, and improving margins very, very quickly. So they're generating massive amounts of cash. They're growing very, very fast. They are not overspending on acquiring customers. They're very disciplined. They are execution machines. They are gaining market share. They're attracting whales. Everything is going correct for this company. So I believe that will continue into 2026. I think they will take more and more parts of the market. I think they will disrupt more and more of the legacy brokerages. And I'm really excited to see what they will unveil next, because this company just keeps moving. So currently, 50% upside to fair value at 172. So this is the third one that I'm really excited for 2026. So those were my three. So Formula One Group, 20%, S&P Global, 41%, Robinhood, 50%. Now, I purposefully didn't, go for some of the, Mag 7 stuff or, tech stuff strictly because
or
I want
PayPal.
to keep it, PayPal. Well, I don't know about PayPal. The timeline on that one is a bit rough. So I use something that I strictly think will have a good 2026. If PayPal will have a good 2026, I have no idea. But yeah, I tried to make it a bit more interesting with, F1 Group and stuff like that people are not familiar with. But I think, it's a good company. So yeah, if you want, deeper dives where I explain a lot more in detail about all parts of the business, just check out the Substack. It's all available there.
First, a couple of things. One, I just checked. The first time I covered Robinhood on the channel was with Arnie and Alejandro, was November 8, 2023. Stock was trading closer to $9 back then.
Yeah.
I checked my live stream, only 1,000 viewers. Stock is up 13x since, I think. But yeah, now, the thing with Robinhood and the rule of 40 for Robinhood and Palantir, it looks incredible today because, of course, it is growing very quickly and becoming more and more profitable. But how durable is this growth? Because at one point, it will not be the rule of 80. It will not be the rule of 100. It will go back to the normal rule of, I would assume, maybe 40, maybe 50. Who knows, right?
For Palantir, I think it is sustainable for a long, long time. I think years. I mean, the operating leverage that Palantir has is just insane. So for Palantir, we can set that one aside. I think they will be able to sustain it. For Robinhood, they've had a lot of favorable year-over-year comparisons, as we saw here. So of course this will go down, but it's not so much about keeping 130. It's about being able to get these kind of revenues while also expanding margins massively, because I think what did they have in Q3, like 100% year on year? Let's see. 637 to 1274. So 100 of this 131 was from revenue, but 31 is from margin expansion. This is the margins. So even if they only had 10% revenue growth, they would still be at 40. So even for Robinhood, I think it is sustainable for a long period of time, because many parts of their business are actually exploding. One of the one that I'm most excited about, and what I really like about Robinhood, actually more than the trading, is the actual interest that they are able to generate off of the assets on the platform. And they're not even like farming yield properly. Like they're not farming on-chain crypto rewards or stuff like that. Like they're not farming staking. There's a lot of money left on the table still, but still the things they are doing, uh, they're getting great yield from, and they're doing it at basically close to zero risk. Like even the credit card, like it is rolling out very slowly, but there's like no risk attached to it at all through the way that they are doing it. So the assets that are eligible, to get net interest from, it is exploding massively. So I think that while it's not as sustainable as Palantir, that just has sheer operating leverage, that are, have the best engineers in the world and don't really hire anyone, they just keep the cost the same and the revenue is just exploding. um, Robinhood is not at that level. So yes, this will go down. It looks great now because the year-on-year comparisons are a bit weaker, but still, for I think they can maintain something very elevated, because over time I can easily see operating margins themselves going to something like 45-50% for Robinhood, uh, because it is also a very capital light business. They don't need a lot of reinvestment. Most of the operating costs are sales and marketing. And when we look at their discipline in sales and marketing at the customer acquisition cost, it is nothing crazy. So for Robinhood, yes, I think it will go down over the coming quarters, but I still think it will be very elevated and best in class. For the industry itself, I still believe that Robinhood will be the best, in terms of rule of 40 score. But yeah, you do have a point, that it will go down from 131 at some point.
Yeah, fair enough. I think the one, I mean, that's, I guess, a known risk, right, is the fact that for now, a lot of the transaction-based revenue does come from the highly speculative, the options, and I think crypto is a big part. Equities a bit less.
Equities is
What?
basically nothing.
Yeah. So
Yeah,
what
so
happens when the, let's say, traders, gamblers, whatever, say maybe we're going into a type of crypto winter or a market crash, a bearish year, whatever, and then we get the 2021 hit? I would assume a big chunk of that revenue growth gets hit, but like you said, they did diversify the business today compared to 2021 a lot more, but it's still a large part of the business, the transaction-based revenue.
yeah, so actually when I modeled the company, I normalized the figures to account for cyclicality in the business. So when I say that fair value is 171, it's not the what do you say? $172 per share. It's not that I'm modeling in some crazy growth. No, I'm actually bringing growth down less than what actual numbers will be, just to normalize it over the next 10 years, just to account for what you're mentioning, that yes, it is cyclical. You will have ebbs and flows, because even though they are diversifying the business, uh, like the different segments are tied to each other. When you don't have trading, for what reason will people keep their assets on the platform or deposit more assets if they're not trading at the same level? So all of the revenues are kind of tied together, even though the lines of businesses are diversified. um, but you account for that when you value the company by normalizing the period, so you don't have all of these crazy spikes, because um, that's trying to time the market, which is of course impossible. We will never know when markets will be hype or not hype. It just happens. It can change in a week, it can change in a month. Like we never know So that's really what you have to do. You just have to normalize the periods to account for, yes, there will be cyclicality. So over a 10-year period of time, you just smoothen it out. So that's the way I deal with it.
Okay, fair enough. Fair enough. I mean, I said this in private a while ago. The bull case for me with Hood is if Robinhood were available to me today, the same as it is available in the United States, I would switch everything to Robinhood. If they have this 2%, 1% match, I would literally take everything I have in
Yeah, me
various
too.
accounts.
Come to Japan, Vlad. Come on, Japan, bro. No, but look, you mentioned something interesting about you covering Robinhood at 8.
I
And
bought it. I bought
oh,
it.
oh, okay. But in hindsight, I think a lot of people encounter this where they look at a stock, they looked at Palantir at maybe like $8, $9, but maybe they didn't buy or they didn't buy enough, and now that it's at 180, like, oh my god, I'm so stupid. But no, Palantir at $8, $6, $7, $8, it was a
Was a
completely
worse company.
different business. Like they didn't have AIP, they didn't solve their go-to market, they didn't solve how they can apply the AI solutions on a broader scale. Like it was a different company. Similarly, Hood, as I mentioned, I looked at it, I saw so many red flags. It's only recently that they've actually started to show me that no, these red flags, like regulatory concerns I had about payment for order flow, all of these things, I had to see that this company has a way to solve these issues before I invested. So those that were early, like me in Palantir, I saw a way for them to solve their current problems. I didn't see it for Robinhood, so I can't blame myself for not investing at the $8 because it was a different company. I didn't understand it enough. It happens. We will always miss out on some gains. So don't beat yourselves up if you feel that you missed a stock that you might have added to your watch list that some years later exploded. It will happen. As long as you are an investor, it will keep happening. But just stick true to your own investment philosophy, and you'll probably be fine over time.
I agree. I mean, companies can go up, like you said, at $8. It's a different company today. It's a stronger company, better company. So
Yeah. So
when you just look at the stock charts, you'll say, "Oh, you're stupid." But then when you look at the business and how it operated, how it performed, you're like, "Okay, it's a different story. Like it was riskier, way riskier before, less risky right now." So it made sense, but it's still like you're looking at the chart, you're like, "I should have done this, should have done that." But
dude, do you know how many people are gonna say that about PayPal? Do you know how many people are gonna, oh yeah, I saw that it was so cheap, but I don't know. And then now when PayPal comes back to new all-time highs in 3 years, they're all gonna feel, nah, I don't know when if that will happen.
I hope
But
so.
but yeah, I mean, when it doubles, which I believe, fair intrinsic value, it's at least a double, just to fair value, and not even talking about, beyond that.
Without the advertising business that I don't
People
think you
will,
have.
yeah, I don't even account for ads. There's a lot of things that I just leave on the table, but people will feel so stupid. But actually, um they didn't do the work, so they shouldn't feel bad. Like even if you miss out on PayPal, or even if you hated on PayPal and you were proven wrong, you didn't do the work, so it's not like you missed out. I didn't do the proper work on Robinhood. I looked briefly, I saw some red flags, I moved on. So I can't really beat myself up over it. Similarly, like people heard about Palantir, maybe they heard Jim Cramer say that it was a black box, a meme stock, and then they looked away. And by the time they looked back, the stock was at $200. Yeah, you didn't look, so you can't feel bad about missing out. And that's the way I look at it.
Yeah, I have a couple of bookmarks saved on X from people that
The
insulted.
receipts, the PayPal receipts.
Yes, the PayPal receipts. My revenge will be sweet. My revenge will be
Yeah,
sweet.
look, at the end of the day, you are not you're only investing for yourself, right? You're not like, if you want to feel bad about someone else making more money in some sort, like, dude, there are people buying some random shit coin making 10,000x overnight. Like, are you jealous of that guy? You had no idea what he was doing. It was just lucky. Like, you can't, keep comparing yourself to others. Just focus on yourself, improve yourself, and do the best that you can with your own investment philosophy, with your own capital, and hopefully, over time you'll do fine as well. I, of course, I feel bad that I missed out on, there's been so many stocks that over time you see doing really good, like Rocket Lab. I was pitched that, recently, like very very recently, when I was in New York for the Palantir office visit. I sat down with Matt Money and some more people, and I was like, okay, what's Rocket Lab about? And then they pitched the whole stock to me, and I was still like, no, I don't get it. Since then, Rocket Lab is up a lot. Like, I think it was like 3x since then, and I don't feel bad about it, because no, I didn't understand it. It wasn't for me, so you just move on. You focus on what you do know about and what you do research. But if I missed out on PayPal after all the work I did, then yeah, I would feel bad and I would blame
Yeah.
myself. But if you miss the ones that you really understand, then that's on you. But you can't just look at, oh my god, I had my money here, but this other stock performed better. That's not something to feel bad about.
Yeah, because I mean, like you said, there are so many stocks out there anyways that you cannot catch everything. Yes, people focus on the most popular ones, but like you said, if you really dig into some things, I'm sure there is like this unknown, very boring business that crushed every stock that we owned in our portfolio. What, are we going to be sad that we didn't find that one? No. I think both of us and
Yeah,
many
or
people in the
whatever
chat
altcoin last night. You can't. So what's happening in the markets today? What do we have?
we have a lot of green.
PayPal, damn, look. I never look at this.
We have PayPal that's up 1.8. That's very surprising.
Damn, PayPal 2%, boss. Wait, your watch list is so small.
What do you mean my watch list is so small?
So few companies.
What? I have
you have it categorized.
fintech.
Okay.
Yeah. And this is just the general, but yeah, I go from fintech, neo cloud, semiconductors, big tech, and then a couple of the crypto names here. But seems like a good day so far. But then again, I've seen so many rug pulls over the past
Oh my
couple of
god,
months.
look at Melly, bro.
Yeah, seems like they're happy Venezuela is.
I wanted to buy Mercado Libre, but am I gonna feel bad about me? How's my boy Dilo doing? Do they have some Venezuelan APM alternative payment method?
The local is up. The local is up 2%. No, but look, I mean, if it's same with Nu is also up 1.4. It's just a potential new market for them that opens up.
Yeah.
With there's quite a lot of money in that country.
Actually, do you know what's insane about 2025? Two stocks that
No.
really performed poorly that I was shocked about. Visa and MasterCard.
Visa and MasterCards?
Yeah. Those were like titans, compounding dreams, They didn't really do too well in 2025. Visa especially. So I feel like there's a lot of fear about,
Stable coins?
cards being disrupted. But if you actually look at what the companies are doing, they are involved in all of the new techs. I don't know what people are thinking. So yeah, I might be looking at those two next. Also, I'm very interested in those.
Amex has been doing better. I think it was up 20% last year, 26 or so. American Express.
Solid. Oh, you know what's crazy? So I visited Costco for the first time in Japan, right, dude?
Yeah, you told me.
First of all, Costco absolutely packed. Dude, it took 20 minutes to find a parking spot. It was insane. Just to find parking, 40 minutes to buy a subscription to even be able to shop there. Like it was insanely packed in Tokyo here. But here's the thing. While we were waiting, so me and my wife were obviously gonna shop at Costco. So I was like, okay, I'm gonna use my card. She's like, no, you can't. I'm like, what? Like, no, they only accept American Express. I'm like, what? Why would they cripple themselves so badly? But apparently now they changed it to Mastercard. So you have to use a Mastercard. You can't buy with a Visa at Costco in Japan or American Express. But before she moved to Sweden, they limited it to only American Express or cash. It was the most stupid thing I've ever heard of. I'm like, what? Makes no sense, right? Like, why would they cripple themselves in that way? But I don't know. It seems to be working well for them. I don't know, but yeah, I was kind of shocked at that. It was insane.
Is Costco new in Japan or
In USA, only Visa. Oh, so it's regional. So in
what?
Japan now, you have to use a Mastercard. You can't pay with Visa in Japan. So in USA, only Visa, and it used to be only American Express in Japan. Does someone know why they do this? Like, do these card companies pay for exclusive rights at Costco?
Probably.
Is that like a major revenue source? I never researched Costco, but I was so surprised. I'm like, why would they do this? Like, why do they make the process to sign up to be able to shop there? Why does it take me 40 minutes? Why do I need to spend 20 minutes finding a parking spot? Like, everything just felt so inefficient, and it felt like it was designed to make you know
Not go.
yeah. I was like, they did everything for me not to shop here, but why is it so packed? Like, I don't know. I don't know. So some magic happening at Costco, dude. It's insane.
I mean, that's the bull case. That's the bull case right there. If you went through all this trouble and you still wanted to go and shop at Costco,
Dude,
I guess
okay. The hot dog, worse than IKEA hot dog. Okay, French hot dog at IKEA. So nothing special about it. Like the shopping itself, there's nothing special about it. Sure, you can buy stuff in bulk, but it's not like it's super cheap, or like it's not like you're saving tons of money by going to Costco. You're probably losing money when you can consider the membership. I think we paid something like $120 for a year. Like,
what
I
does
don't
it
know.
get you?
No, you can shop at Costco. That's what it gets you.
You pay a membership to be able
Yes,
to shop at Costco.
yes. And they
Man,
check
that's
your
a genius
membership
business.
after you try to leave. So as you try to leave, they check, and I said like, okay, well, maybe I can take, because they take your picture on the membership card. So I can't take my wife's card and go and shop at Costco with her card, even though we are,
Married.
wife and husband. Yeah, it is. And also, I told her when we were paying, I was like, okay, but take my Mastercard because I had a Mastercard. She's like, no, it has your name on it. It has to be my name because I'm the member. I'm like, what? Like, what kind of business model is this? I'm like, dude, they're doing everything imaginable to make you not want to shop there.
That's crazy.
Yeah, it's insane.
But I guess
I
I
don't know.
assume maybe in the US, I mean, for everything that I've seen and read in the US, probably at Costco you have a ton of deals. I guess maybe in Japan, maybe not, but I don't know. I've never been, but people go crazy when they go and they shop at Costco. It's like, oh, I got such a great deal for this, such a great deal for that.
Like,
But I did not know all of these restrictions.
is it like a Stockholm syndrome? Like where you're the hostage to your membership, so you have to keep telling yourself that, oh, I got such a good deal, guys. It's totally worth the membership fee. Like, or you, I don't know. You can buy stuff with wife's card. Oh, you can. Second membership gets you a percentage back at the end of the year. What's second membership? We only got one.
No, because you said you cannot go in with your wife's card, so I assume you made a membership as well.
No, I didn't. She's
So
the only one who got it. So you need a second membership, but then you're eligible for a percentage back. I don't know. It's complicated, dude.
you know what Jensen says, huh? You have to spend money to make money.
All right, dude, I don't know. Costco is a while. I should do a deep dive on Costco to actually understand this. Like, why is this so? I don't know.
Someone can commission a research for.
No, don't. I don't want to do the commission. They're not worth it. I want to focus on publishing on the Substack as much as possible over the coming months here. So keep an eye out. I will make sure to include a lot of fully free stuff as well. So it's going to be a lot of content coming up on Substack over time.
On research.typefcapital.com. Link is also in the description. Will be in the pinned comment as well.
All right. Yeah.
Anything else you want to add before we tune off and enjoy this nice little green day for now?
Oh, you're not doing your program? Did I occupy the whole?
You are the program.
I thought you want to do the market open, go through stocks, news. I don't know what you do.
The market is open. No, maybe I'll because later today there is a keynote from Jensen, so maybe I'll do that. But if not, I'll just. And I also want to go outside a little bit.
Do you know that you are the one that I rely on when I want to be briefed on stuff that has happened for a company, because you're always I can always count that you have vetted your sources. It's always reliable info, condensed, and you only keep the it's called like the key information that I need to understand what has happened. So you're my go-to guy for most stuff. So like, let's say that PayPal reports earnings. Before, if I'm not available to see it myself, I'll just check your video first to know what to expect. You always make a good summary of everything. So yeah, you're doing a great job. A bit of glazing before we
Thank you very much.
Glazing the donut. I don't know what the kids say these days.
The glazed donuts, a Krispy Kreme. I think that the only time I ate Krispy Kreme donuts was in Japan, in the train stations. But with that said, thank you all for joining. By the way, people have voted on the 3 stocks. So 59%, I'm not surprised. 60% say Hood will outperform. Then 30% say S&P Global, and only 11 said F1.
Yeah, people don't know about F1, so it's understandable.
Yeah, exactly. I wasn't shocked by it. All right. With that said, thank you all for joining. All the necessary links will be in the pinned comment. Thank you, Emir, for coming here as well, and we shall see each other in the next one. Bye-bye.
Thank you. Bye-bye, everyone.